One of the best and most consistent ways to make money on the stock market is through investing in dividend stocks. And today we're going to be talking about the top 5 dividend stocks on the ASX. Let's get into it. How's it going, guys? Ryan here and welcome back to another ASX stock investing video, and today we're taking a look at the top 5 ASX dividend stocks in my opinion. And of course, we're not just taking into consideration the yield side of things, we're also going to be looking at the growth side in combination with that to show what is providing the best return on the ASX. And when I looked into this, the results actually were quite shocking. But when you do understand exactly why that's the case, it does make sense. For context, what we're looking at is 5 stocks, 4 of which are coal miners, believe it or not. This is really perplexing when you initially, I suppose, start to take a look at things, but it does make sense when you consider in the world at the moment there is a global energy crisis. Coal is one of the main sources of fuel and energy, and as a result, demand has gone through the roof. The coal miners are performing extremely well, and as a result are able to pay out some pretty high dividends, as well as their stocks actually appreciating in value as well. But without further ado, let's jump into today's video and take a look at the first stock. Coming in at number 5, and funnily enough, not one of the coal stocks I mentioned, it is Woodside Energy. And this is currently paying out a dividend in April at $1.44 USD, which is a pretty fantastic amount when you consider that the value of the stock is roughly sitting at the time of recording at $36 Australian. At this point in time, we're looking at a yearly return of 8.52% from a yield perspective and 25.82% from an overall return when you start to include the growth of the stock as well. So it is certainly really bullish when it comes to Woodside. So why are Woodside able to deliver such a fantastic dividend? Well, it really comes down to their achievements in 2022. If we look at the first statistic here, we see the net profit after tax is $6.5 billion, which is an increase of 228%, an absolutely phenomenal amount. Then if we move down to the production volume, you can see that has increased by 73%, which has resulted obviously in that much higher net profit. And their free cash flow is also pretty incredible, $6.5 billion at 669%. Realistically, this is able to allow them to pay those massive dividends. You can see that their full year dividend right there in CPS is 253, up 87%, which is a big number. Now, interestingly enough, even though this is not a coal stock as the next 4 will be, it is an energy stock and is still in that same area as a result, and it is certainly benefiting from the large amount of demand due to the supply shortages of energy across the globe. We're certainly seeing that there are massive restrictions when it comes to these sorts of resources due to the war in Ukraine and of course Russia controlling a very large amount of these resources that are needed in places such as Europe. Coming in at number 4, we have our first coal company. This is Yancoal Australia. As you can probably guess, they're an Australian coal miner, and they've recently just paid out their first dividend, which was 70 cents Australian, which is very significant when you consider that their current share price is hovering right around $5.80 per share. Over the past year, their dividend yield has been 21.01%, and we're looking at an overall growth perspective of roughly 68.39%, which is absolutely massive when you take into consideration both, of course, the dividend yield and the growth of the stock itself. If we take a look at their overall 2022 results, you can see why they are able to pay such significant numbers when it comes to dividends. If you move down to the third box on your left, you'll see their average price per tonne is $378, which was up from $141, and this was due to the energy market's overall situation, which is pretty crazy when you consider that is more than double what they were getting the year prior. Now you can see as well in the top right, they have managed to basically create $10.5 billion worth of revenue, which is almost double what they produced in 2021, up 95%. Yancoal Australia and its investors are certainly doing well for themselves, and they could certainly expect to see more dividends coming fully franked in the future given the overall energy situation and the amazing performance that we have seen from this company. Coming in at number 3, we have New Hope Corporation. Once again, they are involved in the coal industry, but they also have a spin using their agricultural plays as well, which is quite interesting. Now, right at this point in time, they're sitting at about $5.40 odd cents, and their dividend over the past year has amalgamated to about 86 cents overall. Their dividend yield has been lower than our previous company, sitting at about 15.84%, but we're seeing an overall growth of 113.78%, which is absolutely massive. They have more than doubled in value over the past 12 months, making it very attractive, of course, for investors who have been involved in looking and moving into the future as well, considering the overall coal market at this point in time. In 2022 alone, they did have 147% return for their investors, and their EBITDA went up an absolutely phenomenal amount, 330% to $1.5 billion. So certainly lower than other companies that we have been seeing, but the payouts have been very, very significant. You can see that their net assets, the coal price of course, and their cash have all increased on top of this as well. New Hope is certainly a stock which in my opinion is a bit more of an underdog than the other stocks we're looking at on this list, so there is certainly the potential to see massive amounts of growth in the future, and of course even higher dividends when you're looking at this company. Coming in at number 2, we have Whitehaven Coal. They are one of Australia's leading producers of premium quality coal, and they've been doing very, very well from themselves, both from a dividend and a growth perspective. Right now, their share price is sitting at roughly about $7.20 Australian, and their past 2 dividends combined have been a total of 72 cents fully franked. The overall dividend yield is quite low when you compare it to the other companies. It's only sitting at roughly about 6.64% over the past year, and that is really as a result of not having high dividends at the initial point in time. The last 2, as I mentioned, were very high, but the ones prior to that, there wasn't one, and then there was one for about 1.5 cents, to put it in perspective, which really skews the results. But moving forward, we're expecting these much bigger dividends. And if we do still take into consideration though, the overall growth of this stock as well, we're looking at an increase of 125% over the past 12 months, which is phenomenal when we're not even taking into consideration if we did have a full year of very, very big dividends. Taking a look at the financial results, you can see that the FY22 period was very, very significant for Whitehaven Coal. The results, when you compare them to FY21 and FY20, aren't even comparable. Their EBITDA, for instance, is over $3 billion in FY22, yet the year before it was only sitting at 204 million. So you can see the demand for coal and the operations really ramping up has been beneficial in a very, very significant way, and investors have benefited as a result. Whitehaven Coal is certainly one of the bigger players in the coal space within Australia, and is certainly one to keep your eye on as an investor. The dividends are starting to really ramp up now, and it doesn't look like the demand for coal is going to decrease, so those dividends should continue either consistently or increasing even further. And finally, coming in at number 1, and in my opinion, one of the best dividend stocks at the moment, we have Terracom. They are another big coal mining company. They have operations in Australia and South Africa as well. Right now, their share price is hovering roughly around the 75-76 cent mark, and the dividends that they have been paying are 10 cents. So that is a very, very big number when you take into consideration the overall percentage. That overall percentage is 26.5%. That is the best yield we are seeing on any of the stocks in this list at this point in time. And overall as well, they also have the best yearly growth, sitting at 140%. Taking a look at their results, you can see why they have been able to provide such significant dividends to their investors. They have had a record EBITDA of $423 million, and this is as a result of those massive increases in the coal price. You can see their average sale price for coal over 2022 was $403, and that is as a result of 8.96 million tons of coal sales being made. So you can see that the EBITDA is truly reflective of that huge increase in the demand for coal and the huge increase in the prices as a result. Terracom have only just recently started paying out dividends, so I expect that this is going to be a common theme in the future. And given the global demand we're seeing at the moment, Terracom is certainly firmly at the top of the list, in my opinion, when it comes to dividend stocks on the ASX. That wraps up today's video on the top 5 ASX dividend stocks. I'd love to hear your thoughts down in the comment section below, and of course, if you did enjoy today's video, make sure you do leave a thumbs up, and if you want to see more of this sort of content, hit subscribe and turn on those bell notifications. I'll leave it there for today, guys. I hope you have an awesome day. I'll see you next time. Cheers.